Today we're talking about Navitas Semiconductor, ticker NVTS, and a bold question. Could this stock reach about $30 this year? We'll look at real news, partnerships, financials, product developments, and market opportunities to see if this is possible or just hype. First, what does Navitas actually do? They are a semiconductor company focused on next-generation power technology, specifically Gallium Nitride or GaN and Silicon Carbide, SiC. This tech is used to improve efficiency in AI data centers, electric vehicles, renewable energy, and high-power infrastructure. Their GaN and SiC products aim to replace traditional silicon solutions with faster, smaller, and more efficient designs. Think of them as the engine upgrade for the entire electronics world. Now, here's where it gets interesting. Navitas has recently expanded its global distribution and strategic partnerships, including one with Avnet in key markets, which seriously boosts the market reach for its GaN products. They also deepened their foothold in Asia with WT Microelectronics to support customers in AI, performance computing, and grid infrastructure. On top of that, Navitas is attending major investor conferences like the Needham Growth Conference, which signals strong confidence from management in their long-term growth potential. They're making moves to get their tech in front of everyone who matters. A big catalyst could be Navitas' production strategy. They announced plans with their industry partner Navitas Semiconductor to begin 200mm GaN manufacturing. This is a huge deal because it should improve cost efficiency and allow them to scale up production. This is a vital step if they want to serve massive markets like AI and EVs. This kind of production ramp is absolutely critical if Navitas wants to go from niche design wins to mass market adoption, which a $30 plus stock price would almost certainly require. Let's look at the financials and fundamentals. Navitas' earnings have been mixed. Revenues dipped from prior years and they've operated at a loss while pivoting their strategy. However, they've significantly strengthened their cash position to over $150 million after fundraising and strategic equity sales. This means they have the fuel to continue investing in high-growth markets like AI power supplies, data centers, and industrial electrification without facing near-term cash pressure. So let's talk numbers. The total addressable market for Navitas in AI data centers, EV power conversion, and grid infrastructure is projected to be worth multi-billion dollars by 2030. Some estimates suggest these combined segments could exceed $2 to $3 billion in annual revenues. If Navitas captures even a small share of this, and the market assigns typical semiconductor growth multiples, a $30 price tag isn't impossible. But it is very aggressive and would likely require them to execute far better than anyone expects. Now for the reality check. Analysts are cautious and sentiment is mixed. Some think $30 could happen in a strong, bullish scenario, but others say more moderate growth is realistic. Recent price targets have moved up modestly, but reaching $30 means huge revenue and profitability ramps this year. There's also strong competition from legacy semiconductor makers and significant execution risk around design qualification and manufacturing scale. So, to answer the big question, can NVTS hit $30 this year? It could, in a best-case scenario driven by AI data center adoption, expanded manufacturing, and strong partnerships. But it's far from guaranteed and depends entirely on high execution and massive market enthusiasm. Now I want to hear from you. Drop a comment below. Do you think NVTS could reach $30 this year? Like this video and subscribe for more stock deep dives.